Welcome to Iraqi Dinar, your trusted and reliable source for real-time updates and deep insights into two of the most closely followed currencies in today's speculative financial world, the Iraqi Dinar, IQD, and the Vietnamese Dong, VND. At Iraqi Dinar Info, we take pride in providing timely, accurate, and meaningful updates that go beyond surface-level speculation. In recent years, as global markets shift and economies across the world undergo massive structural changes, currencies that were once overlooked or dismissed are now drawing renewed interest. Among them, the IQD and VND are emerging as serious contenders in conversations about global wealth movement, currency reform, and economic modernization. Seasoned investors, once skeptical, are now reevaluating their strategies. Meanwhile, new speculators are discovering what early adopters have suspected for years, that these currencies may represent not only value in their current form, but potential vehicles for transformational financial change. The developments we're now witnessing could mark a turning point in the global economic landscape. What was once considered speculative fantasy is rapidly becoming financial reality, confirmed by actual data, verified institutional actions, and broad international interest. Recent news suggests that we may be on the edge of one of the most consequential revaluations in modern foreign exchange history. The Iraqi dinar, long undervalued and the subject of intense debate, has reportedly surged in value to an astounding $7.43 per unit against the US dollar. This represents not just a significant appreciation, but a fundamental shift in how the dinar is perceived globally. Once relegated to the realm of speculative hopes and fringe predictions, this development is now drawing the attention of mainstream economists, institutional investors, and policymakers alike. For years, observers of the Middle East and currency speculators have floated the idea of an eventual revaluation of the Iraqi dinar. Dismissed by many as unlikely or even conspiratorial, this RV scenario is now being taken seriously. The rise in the dinar's value appears to be driven by a combination of smart governance and strategic economic moves by the Iraqi government. Key reforms include increased fiscal transparency, a crackdown on systemic corruption, and a determined effort to reduce the nation's reliance on the US dollar in foreign trade and financial reserves. Iraq's central bank has emerged as a credible and increasingly powerful financial institution. The country's growing foreign currency reserves and push toward a digitized, modern banking infrastructure further reinforce its ability to sustain a stronger, more stable currency. If the new $7.43 rate continues to gain traction and institutional recognition from other central banks and financial entities, we could see a ripple effect that transforms international investing, trade agreements, and diplomatic alliances. Meanwhile, across Southeast Asia, the Vietnamese Dong is quietly building its own powerful narrative. Reports now indicate the VND has reached an impressive $5.30 per unit, an appreciation that has taken many in the financial world by surprise. However, for those who have followed Vietnam's economic journey closely, this surge is less a surprise and more a logical result of long-term strategic planning. This is not a short-term anomaly or artificially induced spike. It's the result of years of disciplined economic modernization and consistent national growth. Over the last decade, Vietnam has evolved from a low-cost manufacturing hub into an innovation-driven economy with strong global trade ties. The government has aggressively pursued infrastructure development, attracted record levels of foreign direct investment, and signed high-impact trade agreements with economic powerhouses, including the European Union, Japan, and other Asian nations. Additionally, Vietnam's financial sector has become one of the most advanced in the developing world, with progressive adoption of fintech, blockchain technologies, and early frameworks for central bank digital currencies, CBDCs. The revaluation of the Vietnamese Dong reflects not speculation, but the rewards of calculated visionary policy. The country's central bank has demonstrated remarkable skill in controlling inflation, stabilizing its currency, and preparing for deeper integration with global financial systems. These efforts have created the economic foundation necessary to justify a higher, more sustainable valuation for the VND. Confirmation of these dramatic revaluations came from an unexpected but profoundly influential source: Chase Bank, one of the largest and most respected banking institutions in the United States. In a statement that sent shockwaves through the financial community, Chase announced it would begin exchanging the Iraqi Dinar at $7.43 and the Vietnamese Dong at $5.30. This move by such a high-profile institution has changed the conversation entirely. For years, large banks were reluctant to engage with so-called exotic currencies like the IQD and VND due to concerns over regulatory compliance, volatility, and liquidity. Chase's decision signals a decisive break from that tradition. The significance of this cannot be overstated. With a major U.S. bank validating these new exchange rates, institutional legitimacy has arrived. The ripple effect could extend globally, prompting other banking giants such as Wells Fargo, Citibank, Bank of America, and even HSBC to adopt similar policies. As these institutions adjust to the new reality, it could result in widespread recognition and normalization of these currency values on the global stage. This is not just about a sudden rate increase. The value changes are rooted in years of structural reform, both in Iraq and Vietnam. Iraq, for instance, has made strategic decisions to reduce its economic dependence on oil and diversify its trading partnerships. By expanding trade with countries like China, Russia, Turkey, and members of the European Union, Iraq has reduced its vulnerability to Western financial influence and built a more sovereign and independent economic identity. These shifts, combined with rising oil revenues and increased hard currency reserves, give the country the leverage it needs to maintain a robust, stable dinar. Vietnam, on the other hand, has shown the world what is possible through economic resilience and visionary planning. Its journey from an emerging market to a regional leader has been marked by policy consistency, targeted investment in high-tech sectors, and a genuine commitment to financial modernization. It has established itself not only as a manufacturing powerhouse, but also as a country capable of leading innovation in digital finance and central bank-driven monetary policy. The appreciation of the VND is the result of these foundational changes. With the revaluations of the IQD and VND now confirmed by a leading U.S. institution, a dramatic shift in global financial dynamics may be underway. For many investors who have waited, often amid skepticism, ridicule, and regulatory uncertainty, this moment is vindication. Those who believed in the long-term potential of these currencies now stand at the threshold of what could become one of the largest and most impactful wealth redistributions in recent financial history. However, with great opportunity comes the need for careful strategic action. As exciting as this development is, it raises critical questions. Should investors rush to exchange while rates are high, or hold in anticipation of further appreciation? Are banks truly prepared for the influx of transactions? What are the implications of government policies that could suddenly impose transaction limits, new capital gains taxes, or liquidity controls? This is a time to be measured and informed. Acting impulsively could turn a rare financial opportunity into an avoidable mistake. Investors are strongly encouraged to consult with licensed financial advisors, especially those familiar with cross-border currency transactions, international regulations, and asset protection. Ensuring your identity verification is complete, your documentation is organized, and your bank's policies are understood is essential for navigating this moment effectively. Beyond the immediate implications, this development raises deeper questions about the future of the global financial system. For years, the idea of a global currency reset, GCR, has existed on the fringes of economic discourse. The theory proposes a coordinated realignment of national currencies to reflect the true value of sovereign assets, natural resources, and economic productivity, rather than arbitrary market valuations or political influence. Now, with Iraq and Vietnam leading successful revaluations, the notion of a broader currency reset no longer seems implausible. Economists and geopolitical analysts are paying closer attention. Could this be the beginning of a larger movement involving other undervalued currencies from resource-rich nations in Africa, South America, or Asia? Could we be witnessing the first steps in a shift away from decades of monetary imbalance and artificial valuation? While time will tell, one thing is clear. We are no longer speculating about possibilities. We are watching them unfold. And for those who have prepared and stayed the course, the future may hold extraordinary promise.